Hey guys, welcome everybody to day 20 of the trading marathon here on this channel. My name is Daniel, and in today's video I'm going to introduce you to the concept of chart patterns, breakouts, and how you can spot them on the chart. I personally don't use any of the chart patterns for my trading setups, but as I want to offer you a really 100% complete chart analysis knowledge package here in this video course, we have to go over it. And on top of that, I will also point out the weaknesses where those patterns failed and why many people who traded based on those chart patterns lost money at the end, even though they tried their best. But I mean, this analysis technique is just not, doesn't have a very high confidence level or a very high level of setting take profit and stop loss correctly. Yeah, that's actually just the problem with the chart patterns. But my important point in this video is that you must have this knowledge, not just because I want to tell you everything. No, you must know where the other people think about opening a trade based on what and what they see in the chart and where they might get stopped out. You know, like if I wouldn't tell you all of that right now, you would probably go somewhere else and just see the chart pattern and learn them and then lose money in the pursuit of trying to use them. So I'm saving the part of losing money for you because I'm telling you all the things about it and also why you would lose money and prevent it from happening. But you should at least give me your attention while I'm explaining it to you, because I'm telling you also that it's a knowledge that you will need to know in order to find out where other people lose money. Because that's the moment when you maybe want to enter the market in a different direction. So please stick here with me also in today's section, because even though we are not using it actively for trading, it's very important one, you can trust me on this. Because if you have no idea where the money is lost, you have no idea where the money is made. So let's come to the concept here. Many beginner chart analysis courses will, well, maybe straight away at the beginning, because most chart analysis courses don't even have a risk management or trading psychology section, so they will straight up in the first 1, 2, 3 videos confront you with something like this. It looks pretty complicated, but it's very easy, and I will explain the concept of everything to you in this video as I'm saying it, but don't worry just because it looks a bit difficult. It's really, like, honestly, even if I would explain it to some, children in the kindergarten, they would understand what I'm explaining if they could point it out on a chart. So it's really simple, and we need to go over it here. First of all, before we go into the details, I want to explain you just verbally the concept of it all, what it actually means. Well, yesterday we went over support and resistance together, right? If you didn't see that, it's a must watch. Actually, for all the people who just, tuned into the trading marathon in the middle or at some point, we are already at day 20. I highly recommend watching all of the previous days since it's one complete knowledge package. You must always know what we discussed in the previous days in order to, be able to work with that knowledge in the future. Also the knowledge that we are gaining here, because yesterday we discussed support and resistance, and today we will discuss how those support and resistance sometimes interact together with each other in order to build some kind of pattern. Sometimes support or resistance are not really building the pattern. Sometimes the chart is building the pattern and support and resistance is forming the breakout moment. Okay, but in any case, you need to know about support and resistance in order to understand what I'm gonna explain to you in today's video. Well, so let me first of all remind you on what we saw yesterday. After we respected support, we respected it until the moment where we didn't anymore, and then we really rushed down, right? And in between, sometimes there were some small disrespects, but those are so-called fake outs, and they just went slightly below, but in general support gets respected until the moment it breaks, and then boom. But I need to point out, or the very important concept of it all is that this support and resistance, it doesn't get broken straight away and in one rush and you can't do anything about it. No. It always, and this is really true, this is actually what makes it also tricky to work with that. If it would just break through and that's it, then it would be a nice thing, because when You know, at one point, boom, this is gonna happen, you do, but it's a bit more complicated, and that makes it so hard. Look, after support and resistance is broken, it's usually going to be retested from the other side. So as you can see, I'm pointing it out now on the graph, you know, on the left side, there is one red resistance line. After the chart broke above it, it retested it from the upside to so to say confirm it as a bottom, okay? And then only after we saw a continuation above the previous breakout moment, only then it's a so-called confirmed breakout. And why is this so tricky, or why is this the thing that makes it impossible to work with it? Yeah, because just imagine you get a breakout where, first of all, you are anyways not sure if it's going to break higher or if it's going to be a fake out and just, you know, swipes some stop losses and goes back in the pattern. But let's say we see a breakout and then it goes back to the support. So that's really the moment where you really don't know if it was just a fake out or if it's continuing. You need to make a decision based on what you cannot know. And then once it's choosing a direction, it's going really fast, so you cannot react really afterwards. So let's say it goes back in the pattern, bro, it will, you know, like it goes fast afterwards. So you also need to, would be supposed to work with limit orders in that case, you know, and bro, it makes it a huge brain fuck. It makes you want to sit in front of the charts all the time, and you will still not make it because it's so, I mean, I have never personally met any trader at all in the world who is a long-term profitable support and resistance pattern trader only, you know. Like there are some people who have money who do that, but they get obviously affiliate commissions from somewhere, or they make some other trade, or at least they have long-term holdings or something else, you know. Like I've never seen someone saying, well, I got millionaire because I traded some W patterns, you know. It's not like that. Because it is so, like, it's an impossible game to be right at this. Also because W patterns are, in fact, like only 50% W patterns, 50% they are exactly going in the opposite direction, and they're considered only a correction. Yeah, so, yeah, but let's go over it step by step, okay? We really need to understand what we're talking about. So, independently, if we're talking about support or resistance, if it's, for example, here on this picture, it's shown that there is a breakout to the upside, then a retest, and then a confirmation, but also the same concept applies obviously to the downside. If we break towards support to the downside, retest it as resistance, and then get a fall below the previous breakdown moment, yeah, then it's a confirmed breakdown. But obviously also fake out to the downside can happen, and we can go back to in the pattern from the downside direction, you know, towards the upside. So, yeah, just understand the concept and that this is what's usually going to happen. But at any point of this whole thing, you have no idea if it's gonna be a breakout or a fake out when you don't have any other way to analyze the situation. So, yeah, take it with a pinch of salt here. Now, also I have to tell you that there are two different types of chart pattern. I thought about making 2 videos about it, or 3 even, but honestly, we don't want to work with that, so I really try to push it all in this one video, because you really need to understand what we're talking about, but man, as if you want to watch 3 days chart patterns, so let's stick here with this. There are so-called reversal patterns, so that means that the trend in which we are currently going is going to be reversed. So just imagine there is an upwards trend, so higher highs on the chart, higher lows on the chart, and then we see a so-called reversal chart pattern. It indicates that the chart might be turning towards the downside and the trend is shifting. But, you know, as I said, take it with a pinch of salt, because after this so-called trend reversal pattern, you obviously need this successful breakdown with the retest and so on. There are different shapes how this can look. For example, if we take a closer look on the graphics that I'm providing here to you, on the left-hand top corner of the section 2 reversal chart patterns, you can see the so-called head and shoulders pattern. It's a high, then a higher high, followed by a lower high. That's why we call it head and shoulders, because it looks kind of like you know, a shoulder, a head, and again a shoulder, and this head and shoulders are on the bottom line connected with one support line. And if we get the break below the support line, retest it from the downside as resistance and then follow through towards the downside, then it's obviously confirmed breakout. But once that's happening, we are already half the way down to the target, because the target is measured the 100% extension from the highest point of the pattern until to the support line. But man, I really don't want to get too detailed about that, because it will sound to you very complicated, but actually it's not at all, and you will not even need that knowledge. But I will tell you anyways, in case you are somebody who really wants to know everything, you know. But there are also other reversal patterns which are also outlined in the second section. For example, the double top, which are just two equally higher highs, or in most cases the first high is to be considered a higher high, the second a little bit a lower high. But well, again, take it with a pinch of salt, because in the Elliott wave theory you will find out, which I'm also gonna teach you later, obviously, in a few days, you will find out that in the moments where we don't get a successful breakdown at the moment, it's exactly the moment where the trend towards the upside is continuing. So that's why the Elliott wave theory explains even better why the fake outs, or why the unsuccessful breakdown moments result in a very powerful move in the exact opposite direction, very many, you know, to a very high likelihood, like more times than not. Yes, for example, if you see a head and shoulders pattern, and then we don't get this nice breakdown moment. First of all, if we see it and you wait until it's done, you're not in the trade so nicely. So that's one thing. If we see the fake out and don't make the successful breakdown, then it's very likely that we see another impulse towards the upside. So exactly the trade which all the pattern traders are not in, and we liquidate all of them out. So really, you know, it's just an educational day. Please don't open any trades after today's video. Please, and absolutely not based on this knowledge. Also, please be more patient. Today's day 20, so we have exactly 22 more days. Tomorrow is halftime, and from tomorrow we will just, you know, go more in depth the chart analysis. I'm really just introducing you here and what not to do, because this is sometimes more important than what to do. Okay. Well, there are, I mean, to be completed here, obviously there are also trend reversal patterns which reverse a downwards trend towards an upwards trend. For example, the reverse head and shoulders, which is the exact, you know, same thing like the head and shoulders, but in a different direction. Like a low, a high, a low, it's done. And then it's all connected with the resistance line that we need to break through, make a successful breakout moment with the breakout, retest the previous resistance as support, and then continuation and so on. Then we have the double bottom, the triple bottom, cup and handle, all those things. But I really advise you from my heart that you don't trade with them, okay? Just acknowledge that they are existing. Maybe in today's video I can give you a homework which is actually useful. You go over the charts, you make a screenshot from this statistic here, from this graph that I provided you with, and you search some of them, because you will definitely find many of them on the chart. You know, you draw some support and resistance line, you play 1 to 3 hours detective, and you will be happy that you found some, and some will have worked out in the past and some not. I just advise you, please don't trade them actually, okay? Wait until the chart analysis course is done, then you will be able to make some really nice trades, okay? So, third of all, the third concept that I need to introduce you to in this video are the trend continuation patterns. They are, as the name already explains itself, patterns which are happening within a trade. And actually this knowledge is going to be useful, because those patterns we also find in the exact same way in Elliott wave, but we will be able to define anything of those patterns and within and afterwards way more detailed with Elliott wave. We will be able to see the pattern coming before it happens, while it happens, how it will happen and where it will go, but by using the Elliott wave analysis. But here in the chart support and resistance method, you learn to predict the next move after the pattern already happened. And I mean, also the way how they predict the price movement afterwards is not really accurate, because, well, as I tell you, please don't open any trades with that knowledge. But after the so-called bull flag, if you look at the third section in the right top corner, it is supposed after this move to make the same length again afterwards, but sometimes in my experience of 6 years trading, it will make a way longer move afterwards as a wave 3 and sometimes a way shorter as a wave 5. So this is absolutely not accurate, this information, so I don't want to go in more in depth and provide you with things that you should not do, because you just make a screenshot of this chart, know that there are some patterns which reverse the trend after a successful breakout or breakdown, and some patterns which continue the trend after successful breakdown or breakout, and search them on the chart. The most common ones are here in this graph for you. Invest 1-2 hours of your time, honestly. And this is really a serious thing, if you want to learn the craft. How many hours of in my life I already spent in front of the charts, like thousands, like once I calculated it, I cannot remember, so I don't wanna say any wrong numbers, but thousands, it were thousands, bro. Like invest this 1-2 hours today, and maybe every day in the next days, so that you can always maybe also fake check the information I'm providing for you, everything. So go a bit more into the topic so that you really understand. I'm just here to, give you the facts and also give you my opinion about them, but make your own also. It's very important, guys. Tomorrow we will start the section about indicators already. I will show you straight away tomorrow my favorite one, the RSI, that I always like to use, and the different functions, because there are many ways to use the RSI, like divergences or even the, like actual RSI indications. So I will show you them. Then the day after tomorrow I will show you many other indicators that I'm all not using because, as I said, I actually use only RSI, Elliott wave and smart money concepts. That's it. But tomorrow an in-depth video about the RSI and what it can do, and then day after tomorrow all the other indicators that I don't use. Yes, but I also show them to you, obviously. Wait. I need to tell you, I did not show you my half marathon today because I changed now my time schedule. Usually I recorded all those videos every single day, like at fucking 1 a.m. After I already made all my trades, my chart analysis, my German video, my half marathon, everything was done, and then I made the English video. But honestly, I like to be a little bit more fresh and motivated in the English trading marathon videos. So that's why I make him earlier, and now I go running the half marathon after this recording is done. Yes, so that's why I'm gonna show you today's half marathon in tomorrow's video, and so on and so forth. But on the last day, to have this thing complete, I will run him earlier so I can show you. Yes, but that's what's gonna happen next. I hope you have a wonderful day. See you in tomorrow's video. Ciao, ciao.